Good afternoon, everybody. Welcome to this week. Holy banana bread. Here we are on a long weekend. We got lots to cover. We got the news, and of course, by the time I had the news all done, we had even bigger news that dropped. It seems like lately that is all that happens. So anybody who's been watching the charts on Friday, you're probably in a bit of a panic because holy banana bread, boy, did we get a drop. And we're going to talk, definitely going to talk about that. We'll talk about the jobs report that created that. But before I get to that, I want to there's a lot of fear mongering going on out there. So there's a lot of people panicking. There's a lot of people out there touting around that word recession, like, holy banana bread, it's over. We're done. Yeah. But it's not as bad as everyone's making it out to be, and I'll tell you why. So what people have been going on about is something called the SOM rule. So you've probably heard. I know Meet Kevin had a big video on it about how he's going to prepare for this horrible recession because the SAM rule has been triggered. So basically, the SAM rule it's an accurate indicator of a recession, and it's been 100% right up to now. That's, I think, why a lot of people are jumping on this. A lot of people are saying, oh boy, we're in trouble. Well, we're not. I'm going to bring the logic, the reasoning to the table. Just because something has happened every single time, it does not guarantee it happens every time. And that's kind of the thing. You could have flipped a coin and maybe you got heads 5 times in a row. That doesn't mean that next one is going to be a heads. It really doesn't. Now, this is a really good indicator. I don't want to put that aside, but this time it's different. And I'm going to explain why. So the rule basically states that if the 3-month moving average of the unemployment rate rises by 0.5 percentage points or more relative to its low during the previous 12 months, the economy basically is entering a recession, or actually the rule says is likely entering a recession. Now this here, it's a rule that was actually, it's kind of interesting. Like historically, this rule, the SOM rule, it has been highly accurate. It has successfully identified every recession since the 1970s with minimal false positives. So we don't normally see a false positive. I think there was once where it did get exactly to the line, it didn't cross, and we didn't get a recession. That's fantastic. That's great. I like an indicator that I can trust. However, you gotta, and this is the thing, because it's been triggered, you've got so many people on YouTube who are saying, the sky is falling, everybody run, get all of your money out of stocks. You gotta be all in cash because everything is gonna come crashing down. We're heading into a recession. That's what they're saying. Well, maybe not. And it may actually be different this time. And here's the interesting thing. This rule was created by a woman by the name of Claudia Sam, hence it's called the SAM rule. She actually came out a couple of days before it was triggered and said, I know it looks like it might be triggered, but it's different this time, folks. It's different. Here is her quote. This is what she said, her exact words. She said, a recession is not imminent, even though the SAM rule is close to triggering. The swing from labor shortages caused by the pandemic to a burst in immigration is magnifying the increase in the unemployment rate. So this is the person who came up with the rule. It's just coming out and saying, and it hadn't even triggered yet, but she was saying, yeah, there's nothing to worry about here because we do have an exception. Things are different. So you can look at it this way. So layoffs right now, they've hit the highest level in the last year. But when you hear that they're at the highest level in the last year, that sounds bad, but it's not, because historically they're actually quite low. So here's kind of the idea. So do you guys remember last year? Employers were not laying off people because there was a worker shortage, and to lay them off, they would have a hard time if they needed them back to get them back. So people were holding people on their payroll, even if they didn't need them. Well, what does that mean? Now, times have changed, but that means that we have a data set that is kind of, it's not a legitimate data set because they were holding these people. So we have layoffs that are really, really low last year. Hence, that gave us the ability to trigger the SOM rule this year. So it's not because of normal everyday layoffs. It's because people weren't laying anybody off last year and they were holding them because we had that job shortage that came from the pandemic. So for that reason, if anybody's using the SOM rule right now to say, okay, the SOM rule has been triggered, we got a recession, hold on to your seatbelts, folks. No. The answer to that is no, thank you. I'm going to ride without my seatbelt on this one, guys. I'm just not going to. Now, there are a lot of bad indications in the economy, obviously. Warren Buffett just recently sold about 50% of his Apple position, and he did move those shares to cash. But once again, you have to look at it as that he was over leveraged in Apple. So a lot of that was normal rebalancing. So it's not Warren Buffett saying, oh my God, the world is in trouble, I'm going to move things to cash. Because if he was, he wouldn't just be moving Apple. It wouldn't be one company. It'd be a lot more. It would be a lot more. So anyway, I did want to start the show off with just a little bit of an address, just addressing that SOM rule. So yes, the market was crazy on Friday. And well, we did a market open, and so we got to watch it get a little crazy. But and I'll show you guys this after we're done the news. If you actually look at the market, the last half of the day, there was a little bit of a rebound. Yeah, we were still deep in the red, but we put up some green candles as we started to curve. And that's kind of what I was expecting. So we did get what I was expecting. It wasn't that bad of a day. It was a great buying opportunity. There may be people now with a weekend of YouTubers out there going on about the SOM rule. Holy banana bread. Yeah, maybe we'll see a little bit of a panic in the US still on Monday. But I imagine by midweek, most of that should have calmed down. Just the fact that Claudia Somm has come out, the person who made the rule, and said, nope, it's okay, everybody. That should really, really allay a lot of those fears. So everything is business as usual. So yeah, I wanted to address that because I know that I know poor Vic. It's like so I started doing some stuff in the office on Friday after the morning stream, and at one point I came back just after the market closed, and there were all of these messages on comments from Vic saying, "We need an emergency close now, help!" I felt bad. I felt bad for not being there, but that's why I wanted to address that first thing. There we go. It's addressed. All right, everybody. So this is the first Sunday of the month. So what does that mean? Let me show you what that means here. We're going to drop the first one right now. There we go. The Peanut Gallery has just said membership giveaway. All right. Here we go. It'll just take it a second. Bang. I have dropped the first one. So we're going to drop, we'll drop 10 of these throughout the day. And they'll keep coming, and we'll see who wins. Let's see who wins the first one. I'm always excited. Who is our first winner of the day? Look at this. We're talking about Vic, and it's Vic. That's actually kind of funny. Woohoo! Congratulations, Vic. I can't think of a better person to start it off. All right, let's check out the chat because I can see you guys are already in there. Jonathan was in the house first with an I'm ready, and 9 has a banana bread chart. Yeah, absolutely. A Bismarcky. Happy Sunday, all. And Vic says, we need you to calm us down. Hopefully you're a little calm now, Vic. Hopefully you're a little calm. Vic says, I bought the dip on Intel at 400 shares. That's not too shabby. Not too shabby. And that's the thing. These are good buys right now. It may still go down a little bit more, but we're not moving into a recession, at least not yet. That's for sure. All right. JJ says, howdy, howdy, banana bread chat fam. Where's Vineet? I normally Vineet messages me almost every day, at least once, and I don't think I've heard anything from him today. Maybe he's got the kiddo. Maybe. I'm guessing. I don't know. Let's see here. Lisa says, hello, everybody. And we got Richard from Montreal in here with a hi. And here is Jordan with a hello, Candace. And Vic says, just not enough money to keep buying the dip. Understood. Understood. Good afternoon, everyone, says Enid. And we got Carl in the house with a good day all. JJ says, keep your heads on, folks. Do the exact opposite of these crazed predictions. Absolutely. And here's the thing. One of the things I'll never do, I'll never make a video where I basically put one word recession on the front of it with like a red alarm going off on it. I'm just not going to do that. I'm going to give you guys the straight and narrow. I'll go in, I'll take a look. Is it legitimate? If we didn't have that crazy year last year, I would be a little more concerned. I will say this. If you look at the market as three separate sort of phases, you've got green, you got the green light, everything's fantastic, everything is great. You got that orange caution light, so sort of like, hey, we're all doing okay, but things could go bad. And then you got the red light, like, oh dear, bear market type, things are just not in great shape. Hold on for dear life type thing. Well, we're not in the red. We are in the orange, but we've been in the orange for a little while. When you go through like the pandemic and you go through the money printing, that happened. So one of the interesting things is if you look at the amount of money that was printed in the pandemic, it's pretty much expanded our money supply to where it was supposed to be in about 20 years. Now they are working to shrink that down. So that is something that's being worked on, but that is a stressor. That will always be a stressor until we've got things back where they should be. All right. Enid says, let's see, don't spend all your money. More drops will come. Yeah, exactly. When we got Mary in the house with a hello and another hello, guys, don't forget to hit that like button. So I'm going to have a sip of coffee. While you guys are all hitting that like button, turn it green, turn it blue, and we'll go from there. Very good. I certainly enjoyed that. Let's see. JJ says, Candace, you should start your own Rational Reminder podcast. You know what? It's kind of like that. Yeah. It's almost like I could just do some pre-recorded messages and maybe have some t-shirts like, keep calm and listen to Candace. Boy, I'm not going to make those, but that was just a joke. Yeah. Oh, keep calm and your banana breads and your banana. No, keep calm and your banana heads on podcast. There we go. We got Patricia in the house. Awesome. Ampass is in. How does foreign income earned by all-in-one HYLD ETF from Hamilton tax page withholding tax is 0.11? However, foreign income 0.85 and capital gain 0.10. What will be taxed in the TFSA? Holy banana bread. One of the things that you can do is when you're looking at one of these ETFs, most ETFs, if you go through some of their paperwork, you'll actually find a breakdown on how everything is, how it is being claimed or how it is being reported to the CRA from them tax-wise. So that will tell you, for example, there could be a lot of things. There could be foreign tax, there could be interest, there could be a whole bunch of different aspects in that. So you would have to go to that and sort of break it down. And then that will give you a general idea of how things are going to get taxed. So without that, it's hard to sort of make an informed decision. Now, with HYLD, most of the stuff they hold are American ETFs. So there is definitely, I'm thinking, yeah, most of it is American. Because of that, you're looking at a lot of it's going to be It's going to be foreign income. Now, the way the taxes are going to work in that, though, is that you got to look at it this way. And this also depends on where you're holding it, right? If you're holding HYLD in your TFSA, you don't need to worry about a thing. There's no tax implications for you. However, Hamilton is paying withholding tax. So anything that they're holding in there, the taxes are hitting them one way or another. So the taxes get paid. They're just not coming from you in that situation, because the difference would be is if HYLD was an American ETF, as in the company Hamilton was American, then you would have a completely different story. But because it's a Canadian company holding American, yeah, the withholding tax does happen on all of them. And if you hold it outside of your TFSA, then there's other ramifications when it comes to some of the income in it and how that's going to get taxed when you sell. So something like this, and especially something with as high as dividends as what HYLD is, I would put it in a registered account. If you can avoid holding it outside of a registered account, do that absolutely. Stan says, hello all. Patricia says, how are you doing, everyone? Looking to see how the market is going to do. And then congratulations to Vic. Oh, yeah, Vic. Nice. Let's see. It's fair time, which may mean some nice August Boxing Day, Black Friday sales. Exactly. I mean, it's fair time. And, as I said at the top of the show, all about the SOM, the SOM rule, a lot of YouTubers have run with it, and they're like making doomsday type videos. So, yeah, don't worry so much about it. It's kind of like, it's you just got to use some common sense. And as I kind of mentioned, we gave a quote earlier, if you just joined us, from the person who actually came up with the SOM rule, Claudia SOM. And she said, it's different this time. It's different this time. It's not, it is not indicating a recession. And that's just because, as I said before, last year, we had people who were holding on, like we had companies holding on to employees because it was so hard to get employees that they weren't making their normal layoffs. They were holding them instead. So that has skewed that data to sort of artificially cause this triggering. So I would not even be concerned, to be honest. I wouldn't be concerned at all. Let's see. Enid says, liked. Congratulations, Enid. Mark, I don't know if that's the right response, but I'll go with it. JJ says, AIMVAST, no taxes on TFSA. Don't even worry about it. Well, exactly. If you have it in your TFSA, you don't have to worry at all. Roku, afternoon, everyone. Curious, how do I get in the draw for a membership? All right. Well, the first thing, too, is, well, let me do one more just right now because I need to, I'll show you something here. Boop-a-doop-boo. All right. Let's come in here. Bang. All right, here is number 2, and it's happening. It's happening. Bang, there we go. There we go. And Patricia won a membership. Now, underneath that green box, if you see another box that has something in there talking about turning memberships or winning chances for memberships on, then click on that and do that. Because if it's not there, you're good. Unless, and there is one exception to the rule that we discovered, if you have a brand account. Brand accounts are not eligible to win. I don't know why. It's YouTube's rule, but yeah, it's kind of an interesting thing. But it is randomized to a certain degree. My understanding with the algorithm is that the more involved you are, like in chat and liking videos and things like that, it does weight that somewhat. Like it's a random, but there is a possibility that if you're more active, you have a better chance of winning. But I think everybody has a chance as long as you're not a brand and you've got it turned on your account. All right. Vinita is in the house. Was it JJ? JJ, I think, was looking for you, Vinita. Good to see you. Good to see you. There we go. There we go. I think it was JJ that was. Slick Pete. So we will keep going until at least 2028, 2030. Well, that's the hard thing. I mean, nobody can predict. I will say this right now. Nobody can predict when the bull market will end. Nobody can predict when when we'll go into a bear market. It's just not possible to predict it. But here's the thing. There's a lot going on in the economy, and I don't want to make it sound like we can't have a recession, because we certainly can. And in many ways, a lot of people feel like, and this is the thing, if you talk to people, let's just stick to Canada for the moment. If you just talk to any average Canadian, they'll tell you, holy canal, holy, I was going to say canal, holy banana bread. We feel like we're in a recession. And some Canadians are behaving like they're in a recession. So one of the things you got to look at with Canada, because of immigration, that has inflated our GDP numbers. And that alone is preventing us from going into a technical recession. So in many ways, it is like we have been in a recession. The US, though, right now, they still got a pretty strong economy. It's just not going to happen. And I don't think they're going to call it in Canada either. I think we're gonna just sort of scrape. They're going to keep us scraping above that zero line. We may fall down for one quarter, but I don't think we'll get the double in a row. And even if we did, I don't think the government's going to call it at all. All right. Okay, let's see. Ready to hop on the live and get this collab tested started. Oh, yes. So one of the new things I was mentioning is that after we get through the news, I will open it up if anybody does want to come on. So that is something that we will definitely be doing. And we'll do that. We'll do that a little bit later today. Candace, you missed my previous chat mod comment. Oh, is that what I missed? Sounds to me like somebody is looking for a moderation role. That's a possibility. That is a possibility. I think I actually have to be. Give me a second here, JJ. I think I have to do it on. Yeah, here we go. All right. All right. There you go. There you go, JJ. You are a moderator. There you go. You're my first moderator. Congratulations. Yeah, it's it is awesome. All right. Bismarcky says Wealthsimple lowered the interest on its cash account to 4%. We could see that coming. We could see that coming. And as rates continue to go down, look for these rates to come to move even lower. So Wealthsimple will lower, EQ Bank. The regular banks will start lowering their already really, really low rates as well. So just something to keep in mind. That is going to happen for sure. All right. Bismarcky says, now I'm thinking to start buying some Canoe shares. Oh, yeah, I do love me some Canoe, that's for sure. And Patricia says, thanks for the membership. I received a call and didn't see it. Oh, boy. Yeah, I was going to see if I had it starred. The only thing I have starred, I have this part starred. If I bring this up, though, I don't know if you can see. No, it doesn't show the winner. Darn it. All right. Oh, well. What can we do? There we go. JJ is happy with his new role. Trevor says, late again, but hello, everyone. Hello, Trevor. Good to see you. Let's see. Other banks will probably lower the interest. Yeah. It's going to happen right across the board. So when you're looking at parking money, all of a sudden, those cash ETFs are starting to look a little bit better. So they're definitely looking a little bit better on the, yeah, they're just looking overall better. All right, let's actually grab that first news story, guys. Boop-a-doo. All right, here we go. And bang. All right. So, of course, our first news story ties into that little bit about the SOM rule. So, the U.S. Fed, they decided to maintain their current. First of all, we'll look at the rate hike first. So, they have decided to maintain no hike. So, or no cut, no rate, no cut, no right. Yeah. Boy, I really need to learn how to talk today. So, yeah, they're maintaining their rate exactly as it is. No cut, no hike, none of that jazz. They did, however, in their meeting, and this was good for them. Well, it was good for the market to a certain extent. They did signal that there is a possible rate cut coming in September. They also indicated that they are seeing some weakening in the labor market, which will support lowering rates. Oh boy, if they only knew what was going to happen on Friday, right? Now on Thursday, so after this all came out with the Fed. So on Thursday, the jobless claims they came in for July, and they came in at 249,000. Now they had been expecting 235,000, so more jobless than they were anticipating. So that was definitely a huge point to support the whole weakening market. And yeah, absolutely. Now, then Friday came. Oh boy. So Friday, unemployment was expected to remain at 4.1%, but it came in really hot, 4.3%. And that's where everybody's getting all a little bit upset, is with that number and the SOM, and of course the SOM rule. But as we sort of explained a year ago, we were not laying people off. It just wasn't happening. People were holding on to people because of the job and the labor shortage and how hard it was to get employees. So let's not worry so much about that. Now, also, we were expecting to add 185,000 jobs. That also came in a lot short of that. They came in at 114,000. So not as many jobs, higher unemployment. These numbers, they really shook the market. And of course, the fear that we're moving into a recession. So that didn't help either. Not a great day for the US. But when we start looking at rate cuts, here's the thing. It depends. It depends. Now, once again, some of the fearmongers on the internet, they're starting to say, oh boy, you watch, we're going to get a bigger than 25 basis points cut in September. We're going to see 50, maybe a full point. They're going to have to go crazy to try to stop the recession. They don't have to go crazy. I'm still calling for a 0.25. I think once calmer heads prevail, and as much as the panic and the panic of the market, the panic of investors, the panic of YouTubers, Jay Powell does not really listen to that. I don't think. I mean, he might look at it and say, "Oh my God, they're being silly again." So I don't think it's something we have to worry about. So that's kind of a cool thing. JJ says waiting for cash and PSA to drop their rates too. I don't think they're gonna. If you look, and once again, once the news is done, we can pull it up a chart. But when you go further back in time, even through when the rates were low, they were still paying the same amount. So I'm actually not anticipating those rates to come down. All right. Ambeth says, appreciate your latest 0 to 100K TFSA challenge. If I recall, some new picks are leveraged. How did you decide on your selections and balancing? Thanks and congrats on its performance. Part of it is just, so right now in the situation, the only reason I was into that one ETF and then the QQCC is we're running a small side challenge, and obviously HXQ1. So I was kind of like, well, right now, oil's a little down. Oil's going to be coming back up, especially if we start to, and this is interesting, especially if things start to get out of control in the Middle East. And this was before things started to get out of control in the Middle East. So I was like, all right, you know what? I wouldn't mind a little bit of leverage on that. And QQCL, fantastic. It's going to do well. So I just moved those two into that. And keep in mind, between the three of them, it's all the same ETF. It's just one has no leverage in covered calls. The other has covered calls. This one has covered calls and leverage. So basically, I just wanted to turn that on. So I moved that into that. And I thought that was a good move. Now, mind you, if oil doesn't go up and it were to tank, even then, I'm still okay with holding that. I think it was a strong move for where I'm looking to move to. All right, let's see here. All right, Jay says holding to HHL healthcare and ZAG bonds have paid off for me. I will sell some of my S&P 500 after my ex-dividend date. Yeah, like right now, some of these, especially some of these Treasury ETFs, they're looking to do pretty well as those rates come down. Because remember, Treasury bonds tend to have an inverse relationship to interest rates. So when interest comes down, they go up. So you can get some good growth out of those ETFs for sure. Let's see. Candace, next thing to buy on your watch list would be HYLD. Yes, it is on my list. It is on my potential list for sure. So I do like that one. All right, let's jump to the next news story. So we had some Canadian GDP data come out. So we're not looking at a full quarter GDP. Basically, they released the May monthly GDP data. So our economy is once again sticking to the positive side and staying out of technical recession territory. That's really not a huge surprise. So this was led. So the values that we came in with. Oh, actually, so we came in at 0.2% for May. We were actually only expecting 0.1%. So we actually did a little better than we were expecting. So this was led by expansions in manufacturing and the public sector, while retail and wholesale trade weighed on that growth. So yeah, now retail and wholesale trade, I think both of them will do better with more rate cuts. Right now we've seen two. We need to see a bit more before we're going to really start to see a pickup in some of these sectors. Now the Trans Mountain Pipeline expansion, that helped a lot, as the pipeline transportation industry rose basically by 1.5% for the industry. So that's not too shabby at all. For the second quarter, Statistics Canada expects real gross domestic product grew at an annualized rate. So they're looking at 2.2% right now. So that's not too shabby at all. So while the economy has not dipped into a recession, growth has been meager. So that's what we're saying. Kind of like I mentioned that we were sort of sticking just above the zero to keep us out of that technical recession, and that's what we're doing. And the whole thing is, if we did not have increased immigration, we would be in a recession. There's no doubt about it. So, that has helped. And that has also been good for not just Canada, also the US as well has had some strong immigration as well that has helped some of their numbers. So that is not too shabby. All right. Al is in the house with a whole lot, everybody. JJ saying, hey, Al, and hey, JJ. All right. Well, now that Al's in the house, we should drop another membership, shouldn't we? Let's do it. Bang, boom, here it comes. All right, come on. It's slowly thinking. All right. Oh, who's going to win? Who is going to win? All right. King of Day. King of Day is our winner. We'll have to change his name to Win a Day, I guess, something like that. Lisa says, here we go. What does the government base the inflation rate on? I have a hard time trusting their numbers. So their inflation rate itself is coming out of that basket of goods that they have in the CPI. Trying to think, I think there's like about 50 items or so in that basket. So they tends to be standard items that don't change. Now that you do have core CPI as well, and that's where you take some of the more volatile things like energy and food out of it. So just something to, it's kind of that interesting thing. Now they do update it from time to time, and a lot of people think we should update it a bit more too. But yeah, it's kind of one of those things. All right. A 9 says, U.S. Treasury bond ETFs seem better than buying individual bonds. With the ETFs, if yields go up, you get the yield, but with individual bonds, you just get the capital loss. Yeah, I would highly second that. I think the ETFs are the way to go. I think you're going to make more on the long term with them. All right, King of Day. Wow. Thanks, Candace. Oh, you're welcome. Let's see. Bond, SPAY, and Pay are all good choices on the TSX, and agreed. Show no fear. Yeah, exactly. All right. Oh boy. Let's get to our next news story. Overtaxed. Oh boy, overtaxed. So the Fraser Institute, they released a study on Canadians and guess what? Taxes. So the average Canadian household, and this is staggering, but the average Canadian household spent 43% of their income on taxes in 2023. And that's a lot. So according to the study, the average family earned approximately $109,235 last year and spent $46,988 on taxes. Wow. So when they were calculated, they were including, of course, income tax, sales tax, fuel tax, and property taxes into their calculations for that. Now, here's an interesting thing, and this kind of surprised me. So they also had the data for 2000. And in 2000, the average income then was almost half of that. So 54,488. But they paid $25,259 on taxes, which that comes out at 46%. So that's kind of interesting. We were actually paying more taxes, before the pandemic than after the pandemic. But, my mind was thinking, wait a minute, I thought taxes used to be a lot less than they are now. If we really go back, they also had data from 1961. So 1961, the average family income was, get this, $5,000. Wow. So $5,000, but taxes were only $1,675. So basically 33.5%. So we were paying a lot less taxes way back. Now, I don't know how many of you were alive. I know some of you were alive in 61, but yeah, we've come a long way. And now to put this a little bit into perspective. So the amount people spent on taxes last year is more than they spent on housing, food, and clothing combined. So according to the study, since 1961, a family's total tax bill has increased by 2,705%, while housing has increased by 2,006%, and food expenses have gone up 901%. So yikes. Yeah, we're paying way too much taxes. Way too much taxes. Oh boy. Yeah, exactly. Exactly. Let's see. Comic books were 10 cents back in 1960. I'll tell you though, if you would have bought the right ones in 1960 and in the 60s, you probably, put them in like the sleeves with the backing, and you probably have some pretty valuable comics for sure. Because I think in the 60s, wouldn't that be like the debut of like the Fantastic Four? Maybe Spider-Man too. Yeah, so you could have some really good comics that are worth a lot. Jay says, what's crazy is Canadian dollar is dropping. Let's hope it's not the next Zimbabwe. Well, let's hope not. Let's hope not. Actually, interesting, the Canadian dollar on Friday, it actually did okay. It was sitting around 72 cents. JJ says, let's see, I'm part of the new generation, so maybe my past life was alive in 1961. Oh, there you go. Ooh, interesting. AMFAST says, appreciate your thoughts with new HBIG ETF, growth and income, 60% equity and 40% bonds. Would this be good for, a prior retirement with upcoming rate cuts, or best for retirement? Thanks. I'd need to look at that one. So once AMVAS, if you can ask me that one again once we're finished the news, so I can actually pull it up and take a look at it, because I can't answer that blind. I can't go in there. I need to look at that one. Let's see. Al says, I looked at the taxes a few months ago. It is very similar to us. Yeah. Now with the US, which state you're in can have a huge difference on your tax bill. There are states that are very tax friendly, and then there are states that are not so tax friendly. And my understanding is California is one of those states where you're going to pay more taxes than a lot of other states. But correct me if I'm wrong. Now, and I'll ask this to the Americans who are here, is California the highest taxes in the US, or is there somebody I'm overlooking? Let's see. But the US has more deductions. And JJ's throwing in, based on the Canadian couch potato allocation, once you're in retirement, you should have about a, let's say 50-50 income to bond allocation or higher bonds. So HBIG is a good tenationary stage to retirement. There we go. Berger says, I'm hiding my tax behind a corporation. Ooh, that's not a bad thing to do. Yeah, there's definitely a lot of things that you can certainly do. And I know from talking, because we had, when we did the open to close, Berger's was on the show. And so, yeah, smart guy, very smart guy. Al says, I am sure there are tons of business tax deductions available in the US as well, but those deductions I am not aware of. I see no personal tax in Texas. Yeah, well, I mean, there's a good reason why Elon has moved a lot of his businesses to Texas, just because of the taxes. Let's see here, state tax. Yeah, okay. Sort of like Alberta, where you don't have a provincial tax, so you're still paying the GST there. But let's see. JJ says pre-transitionary stage to pre-retirement, maybe 2 to 3 years out. All right, Joe. I knew I could rely on Joe. California and New York are very high for state income taxes. So there we go. So both California and New York. Makes sense. Makes sense. Al says, Tennessee, Arizona, Florida, Texas, no state taxes. There we go. Oh, Florida too has no state taxes. Interesting. I knew about Arizona and Texas. I did not realize. I didn't know about Tennessee and Florida though. Very, very interesting. All right, let's drop another membership here while we're before we go into the next news story. Bang, boom, here it comes. All right, let's see what happens. It's always the wait. It's that wait. I'll have a drink of coffee while I wait to tell me who the winner is. And Jay has won. Congratulations, Jay. Woohoo! There we go. $25 million in debt in the $25 trillion in debt in the USA. There is no president fixing that anytime soon. No, absolutely. And it's actually funny. I heard on one stream, somebody's stream, they were talking about, oh, the US just needs to get really, really deep into Bitcoin and let Bitcoin solve that problem. But one thing I was kind of thinking of is, okay, let's say the US went crazy into Bitcoin and then Bitcoin went up and then the US sold it all to pay off some of the deficit. That would absolutely tank the crypto market. So I'm sitting back thinking, no, thank you. US, find another way to solve your debt problem. Because, yeah, especially because I think Michael Saylor at one point said that the US should hold more Bitcoin than anybody other entity out there. So, it would be great while they're accumulating, but if they did use it on something like that debt, it would certainly tank Bitcoin big time. It would probably recover, but it wouldn't be pretty at all. Let's see, I only learned about Tennessee from the NFL. Okay. That makes sense. All right. AI returns. So this has been another big issue that we've been running into this week as well with tech. So investors are beginning to get worried about how much has been sunk into AI without the returns to show for it. So, and that's true. Almost every tech company out there is going absolutely pedal to the metal into AI. And, a lot of them have not been getting the returns that investors are expecting. And hence, some of these earnings reports have not been going very well. So there is the obvious fear that it could be another tech bubble ready to pop. And, in that case, some are thinking, oh my God, if that happens, my investments may evaporate. So holy banana bread, what am I going to do? So people are getting a little bit worried. I don't think we're looking at a bubble breaking. It's just, I'm not going to say it's impossible, but I really don't think it's happening. I think we still have a long runway left. I think people just need to get over over all of these fears that keep, because it seems to me right now the market's in this point where it doesn't take much to get everybody in a panic, because everybody's like, waiting for the shoe to drop, waiting for the shoe to drop. So it doesn't take much. All, you hear a little sound and people are selling stuff and, running for the hole. Like, sort of like, I guess when I say hole, I'm thinking like, your storm cellar, that type of thing. So yeah, it's not the best thing out there right now. So some major institutions, so Goldman Sachs, have published reports recently calling into question both the short and long-term viability of AI investments. So that, of course, adds to that fire, adds to the whole bubble fire. So with some tech companies missing on earnings, that fear has, really, really, really added to some of the sell-offs that we've seen. And that's why we've had a lot of, look at Microsoft. But here's the thing. One way to tell if it's just overreacting fear is when you look at an earnings report that's bad and the company goes crazy, the stock falls really far. Look at how fast it recovers. If it recovers relatively fast, then you almost know that there isn't a lot of substance to that fear, and it's just absolute fear and not too much more. And you'll see if you look at Microsoft, it's kind of in that ballpark. So I think we're good. I think we are good. Let's see. So Microsoft, Alphabet, and Amazon, they all failed to show AI was paying off. And those are the ones that had their big price drops this week. But they're all starting to recover. Well, perhaps not so much on Friday. I mean, Friday, everything dropped for the most part, except for the very end of the day. And I'll show you that once we're finished with the news, because that's kind of an interesting thing. I sort of feel like the news this week, there's more downer stories than happy ones. Here's another downer story for you guys. Insolvencies, they're up. Oh boy, are they ever. So new data has come out showing that insolvencies for both Canadian consumers and businesses rose during the second quarter. So this data is coming from CARP, which is the Canadian Association of Insolvency and Restructuring Professionals. So consumer insolvencies, they were up 12.4% in Q2. That is a 4-year high. So that's basically people, regular folks declaring bankruptcy, that type of thing. So the last time filing volumes passed 35,000 in a quarter was during the fourth quarter of 2019. So that's kind of where the last time it was really high. So households, they're basically facing high living costs coupled with high debt servicing costs, as well as some of the lingering inflationary impacts. So it's kind of like that perfect storm. That's not being nice for every household. And there's a lot of households that they're just gobbling up debt as fast as they can. And then, of course, eventually that the servicing keeps getting higher and higher, and sometimes the bow has to break. And that's kind of what we've been seeing. Now, for businesses, 1,541 businesses filed for insolvency during the second quarter. That is an increase of 41.4% from the previous year. Now, as bad as that sounds, the insolvencies actually fell by 23.1% compared to Q1. So we've actually improved, believe it or not. So the decline in business insolvencies from last quarter suggests, it suggests that things are starting to stabilize a little bit. And this is perhaps in part due to businesses managing their finances a little more conservatively to meet pandemic support repayment obligations. So, and that's actually not a good thing, I guess, if you're looking for work. So a lot of these businesses are not going to be, they're not going to be hiring. They're going to be just taking care of business. Now, when the rates continue to come down, it's going to look a little better. It will look a lot better at that point. But for now, it's not in the best state. It's not in the best state. Berger says, let's see, corporate tax rate 21%, but if you open a limited partnership, it's 15%. You can just manage your own account and pay less than capital gains. Cost is $250 fee a year. So that's not too bad. And I love this. So El Salvador and the Central African Republic use Bitcoin as their official currency. Yeah, absolutely. I think Bitcoin's here to stay. it's one of those things, and I actually love it. They had an interview with, I think he's the president of El Salvador, and they were talking about, oh, well, you've been buying Bitcoin, but the price has been way down. And he was like, I don't care about that. And they're like, well, why? And he says, because for me, one Bitcoin is equal to one Bitcoin. So, and I was like, yeah, that's a great answer. That's a great answer. Um, you know, so, and I believe El Salvador, I think they're also mining Bitcoin there using geothermal energy from volcanoes. So that's pretty darn cool. Wayne says, my NVIDIA and AMD puts paid out well last week. Oh boy, I bet they did. Waiting to see if the NASDAQ continues its downward correction. Reminds me of the 1990 crash. Yeah. And there's a lot of people who are saying, oh my God, this is just like the dot-com crash, where it's going to happen again. I don't think it's going to happen, but it's anything. This is the whole thing. Anything is possible. Like, none of us really know what's going on. We can make, we can look and sort of assess probabilities. Like, okay, what is most likely going to happen? And even if we calculate everything, we have everything all lined up perfectly, all it takes is a black swan event to come along, and it can torpedo absolutely everything. So, I mean, right now, we got a potential war brewing in the Middle East. And potential in that, I actually meant to check the news before coming on, just in case it actually started. I was like, I probably should know that going on. But luckily, things are still okay. Things are still okay, and I'm hoping we don't get the war. As much as I'd love to see my oil stocks go a little bit higher. I'm okay with them not if it means no war. So I'm definitely good as that. And Al saying, yeah, it is not as bad as .com. Yeah, I mean .com. I mean, quite literally, companies, and you can draw a comparison here, but companies would throw the .com into their name back during the .com craze, and all of a sudden, everybody would just start buying them like crazy, and they would be their valuation would go. Companies that had nothing, all of a sudden would have crazy high valuations, and it's kind of like AI. We're at a point where, a lot of these small companies can throw the word AI. Now, here's what I would say. So here's how I approach the potential bubble. I look at it this way. If you're looking to be involved in AI, either stick with the well-established companies. So your Microsoft, your Apple, your NVIDIA, and they're going to be fine. Even if we had a bubble burst, they're still going to recover. They're not going anywhere. Or if you want exposure to some of the smaller companies, the smaller up and comers, stick with an ETF, either a tech ETF, which is going to be fine, or there are AI ETFs as well. So either or would be fine. So I would say an ETF, or stick with your blue chip. Stick with your blue chip winners. That way you're not going to be taking that additional risk. Now, I don't think there's going to be a bubble, but like I said, I could be wrong. There could be all of a sudden the bubble could just go pop. And, in case that does happen, it never hurts to be. Because I always say this, I would rather take too many precautions than not take enough. Because, when the poop hits the fan, and it does from time to time, you want to be in a good position when that happens. All right. Minor blip to add some more. Al says, I remember my friend told me that a good PE number was 125. Oh boy. I remember looking at PE was 200 back then. I wasn't into stocks, but I remember looking into it over the course of a summer. Yeah. Yeah, it was the .com bubble. I was not into stocks back in 1990, but I hear stories and I'm like, oh boy. So yeah. All right. Let's get to our next story. All right. Oh boy. Why is it always in Quebec? And this is my first question. Why is it always in Quebec? So apparently there is a real buzz in the crime world these days as thieves have been stealing bees. Yes. So one beekeeper in Quebec lost 200,000 bees to thieves. They came in the night for her bees. That's actually a smart thing because if you have a hive, they sleep in the dark. They're not going to come. You'll have less of them coming out and causing a commotion if you're going to. So if you're going to steal bees, do it at night. But oh boy. Now some other beekeepers have also been having problems, and some of them have been having problems with people actually coming in and not stealing their bees, but lighting their beehives on fire. So vandals have been also striking different aviaries, I guess you call them, in Quebec. Oh boy. So here's the thing. So an average beehive, it has about 50,000 bees. So this equates to, so basically she had about 4 hives stolen. So the loss of one hive is easily in the thousands, especially if you consider the loss of revenue from all of the pollination. Because a lot of these beekeepers, that's what they do. You know, some farmer will say, "Hey, I need your bees for a couple of days," and they would rent the bees. So they would transport the bees to their, their fields or their crops, and the bees would go out and do all of the pollination. And then they would take them again. Once again, they take them at night because the bees will all be back in the hive, so they don't lose any of their bees. So it's a pretty big business, and that's a lot of money that can be lost because of it. So now, as a result, beekeepers in Quebec, they're now being forced to add cameras to guard over their hives. So, and that's costing them, thousands of dollars to install all of these cameras so that they can catch potential bee nappers on film. Now, the largest bee theft, because I had to know. So the largest bee theft was also in, guess where? Quebec. It happened in 2016 when a thief stole 5 million bees. That's a lot of bees. He was caught, though, and he did serve jail time. Of course, I'm curious about how he was caught. I kind of envision that the police set up a sting, but I don't know. Oh boy, that's probably enough bee jokes in that one there, And Jay says, because Quebecers are special. I love Quebecers. Yeah, it's one of those things. Quebec has some of the more interesting crimes. I mean, that's because Quebec is where the Canadian National Maple Syrup Reserve is. So that's kind of interesting. They had that big theft that happened there. Meow is saying GPS on those hives. There we go. Just put an Apple AirTag on your beehives. Provided they work through the honey. But I imagine. Berger says it's crazy. ASML will make 45 to 60 billion next year on back orders from 2 years ago, and the market cap is 327 billion. So what, 8 to 9 times those earnings? Yeah, it's kind of interesting sometimes. Now, a lot of it boils down to, if there's a demand for a company, it's going to inflate their market cap as people are willing to pay more for it. And I know with ASML, a lot of people it's been a hype stock for a bit. So that's not surprising. JJ says microchip each bee. What a work. Oh boy. Yeah. But here's the thing. Yeah. I don't know. That would be kind of funny. You're tracking some person and it's like, did you steal the bees? No, but I got stung by one. See, here's a microchip stuck on. Yeah, I don't know. Oh boy. All right. Well, there was our bee story. We're almost through the news, guys. We're almost through the news. This is kind of interesting. So this is not a sad story. So there's a guy in the US has got this big Costco gold flip happening. So, and I thought this was brilliant. So this guy, he's been making some money flipping Costco gold bars. And here's how he's doing it. So he buys them with a roughly 4% discount via his Costco membership and the cashback reward on his credit card. So between the two, he's getting 4%. And that's fantastic. So he then sells them for the same price Costco was selling them for. So he's not marking them up or anything. He's just selling them at cost to them. It's like, okay, these are what they cost. Here you go. So they're around, so roughly, I just use 2,000, like it's a little more than 2,000, but they're around $2,000 US per bar, and you're allowed to buy 2 bars in a single transaction once a week. So that's basically 4,000. So of that, so if you're doing what he's doing, so if you're spending $4,000, you're getting back $160. So, that's part of your flip. So you're making $160 per week per membership. Now, this guy has multiple memberships that he's doing this with, and he is reporting that he is making between anywhere from $300 to $500 US per week just flipping Costco gold bars. And keep in mind, these bars are very popular. Like Costco can't keep them on the shelf per se. As soon as they have more come into stock, they're gone right away. So this guy is probably huge on getting in there with his memberships to make sure he gets them every single time. So just something to keep in mind. JJ is saying Costco bars. Jordan's next flipping gig. Maybe. I don't know. Exactly. That's what I was thinking. Definitely a smart guy. I mean, there's nothing like doing that. Anytime you can buy something at a discount and sell it, without the discount to somebody else, I mean, why not? Now, the fact that the story went mainstream means that there's probably going to be more people trying to do it. And this is the danger, I guess, with something like this going mainstream. Costco finds out about it and says, oh, no discounts. So they could take away whatever discount his membership is giving him. So then he would only have the cash back on his credit card. So that would maybe make it not as feasible. But as of now, it is still a thing. It's still a thing. All right. So what do we got coming up this week? We got in Canada on Friday, August 9th, we do have jobs data coming out. So we'll have to see how our jobs are doing, how our unemployment is doing. Yeah, it could be interesting. It could be interesting as well. The US, though, and this is the beautiful thing, not a lot happening. Not a lot happening in the US. It's a pretty slow week, so we don't have too much to worry about earnings-wise. Up here, we've got, let's see, we got Constellation Software, let's see, Manulife Financial, Great Western, Nutrien, Power Corporation of Canada. So yeah, we got a few earnings, nothing big, nothing really that big. Basically in the US, not a lot of great earnings this week. Well, there's ExxonMobil and Chevron. Those are a couple big ones in the States. Everybody, though, is waiting for August 28th, which is NVIDIA's next earnings report. So that will be, I think that's going to be interesting. So we'll have to wait. We'll have to wait. Yep. All right. That is the news. That is the news. All right. Just give me a second here. There we go. Let's see. I hope Costco does not come after him. I hear you. Well, they won't come after him, but they might just close the loophole that he's using. That's what I was kind of thinking. Jordan says, I would never buy from Costco. Just a personal preference. Okay, fair enough. Fair enough. All right, now that we're through the news, it is time. It is time to drop another membership. Let's see where it's going. Round and round it goes. Where it stops, only YouTube knows. And come on. Let's see who it is. Come on, tell me. Allison Parker. There we go. Congratulations. Once again, this is what I love. So we've done 5. So we have 5 more left. All right. Now, I did say once we're finished the news. So this is kind of a new thing we're going to try here for a bit. I'm going to open up the chat. Well, not the chat, but I'm going to open up the thing. So if anybody wants to join me, I will drop the link down below. And I know one person who's been biting at the bit. All right, here we go. There is the link. So if you're brave enough that you want to come on, I will point out right away that it really likes Chrome. So if you're trying to enter like through something that's not Chrome, it can certainly be a little a little bit temperamental. All right, just give me a second here. I need to get rid of the beaver. Let's do that. Bang. And let's go back here. There we go. Big screen. Perfect. All right. Now, I need to, let's see here. Yeah, just a congratulations to Allison. Meta, Apple, good earnings, and they stayed green for the day, even though every tech was red. Yeah, I did notice that. That was one of the interesting things. Oh, let me show you. I remember there was that one thing I wanted to show you guys. I'm just going to bring up my presentation here. Let's grab the other screen. All right, there we go. And right here, that's what I'm looking for. All right, bang, here we go. There we go, perfect. Here's the other screen. So as you can see on Friday, this is kind of a common trend. I was saying, and I said this in the market open, that, you know, I was expecting things, and I think it began here. I was expecting, you know, some deep red, and we got that deep red. But I also said I thought we would get a little bit of a recovery towards the end of the day, and here it is. So here is that recovery. So the last, basically the second half, basically around lunch, it changed. We did get a tiny bit of a recovery. That's kind of what I was expecting. Now, of course, for Canada, we're not going to see things. We're not going to see anything until Tuesday, because Monday's a holiday. The whatever we call it, Family Day, Natal Day. I think every province has its own name for it. In chat, what does your province call Monday's holiday? I'm just curious. I'm curious. Now, before we go any further, I want to, let me just, oh, I know we wanted to take a look here. So here was this whole thing with the heat map. Like, take a look. When you look, and I think it was Al was mentioning as well, like, look here, Apple did okay. They were up 0.69% on Friday. United Health did okay. Let me just, I'm going to get rid of the losers here. Let's just pull up the really big winners. Johnson & Johnson did okay. Procter & Gamble, Coke. Now, funny thing, not Coke, but McDonald's is that funny one here. So a lot of people who are into the whole, oh my God, the world is failing, we're going to have this massive recession. Well, one person actually said, I'm going to put money in McDonald's. When there's a recession, McDonald's does well. And they did do well. They did do well, 2.95%. So not too shabby. We had a little bit of things. Now in Canada, let's just head over here to Canada. Bang, up, right over here. Bang. Okay, that's not Canada. And that's not Canada. That's all right. What's going on here? No problem. I will. Let's just go back here. Screeners, stocks. We can fix it. We can fix it. Oh, I don't want to be in a screener. It helps if I actually, the problem is I'm trying to pay attention. Yeah, it's fun. I don't want to, I want heat map. Whoops. All right, stocks. And we're going to switch over here to, I use all Canadian companies. Here we go. All right, let's get rid of the losers here in Canada. And you can see we did have winners. Oh, look at this, Fortis. I'm loving this. One of the things I've been going on about for a while is that utilities have been doing really, really well. And they're going to really respond to, well, what is it? We're going to respond to the rate cuts. And look at this. Fortis is up. Hydro One is up. Emera is up. Canadian Utility is up. Algonquin's not. So, yeah, I mean, this is fantastic. And even like Bell and TELUS looking strong here. I don't know what Rogers did. Let's just pull this. Oh, Rogers, that's because, oh, I have to, let's turn back. Oh, yeah, Rogers was down. Rogers was down. So, you know, what can you do? There we go. There. So, yeah, of the three of them, Bell did, well, TELUS did the best, followed by Bell. So it has been one of those days. There's certainly been, you know, it's been interesting nonetheless. And hold on, we're going to come back here as well. I wanted to do this as well for the S&P 500 because we did for the TSX. And you'll see with the S&P 500, same thing. We got the rebound coming right at the end of the day on Friday. So that's positive for sure. As I was saying, and anybody who joined late, we did talk about the whole Psalm rule, and how a lot of YouTubers and a lot of people have been going, oh my God, it's been triggered. We got a recession. Even the maker of that rule, so Claudia Psalm, came out and said, nope, not this time, because a year ago, nobody was laying people off. They were holding people they didn't need because of the how hard it was to hire people, the worker shortage. So that's thrown all the data out of whack. So that rule that a lot of YouTubers and a lot of financial panicky type people have been calling, it's not valid. It's not valid. So we are safe. We're safe, folks. Just letting you know. All right. Let me get back here. Boop. There we go. All right. Now let's get caught up with chat. Holy banana bread. All right. Let's see. Miss YL, I just put in 100K from my inheritance. I hope you're right. Still up 600, but I was up 6,000. What did you put it into? Just because I'm hoping I'm right too. Or did you just put it into the market in general? Let's see. Civic holiday, says Lisa. Civic holiday in Ontario. Okay. Let's see. Family Day is in February. Oh, maybe. I always get them mixed up. Jordan calls it cat ears. Heritage Day in Alberta. Okay. Saskatchewan Day. Civic holiday. All right. No holiday in Quebec. Really? Okay. So everybody gets the day off but Quebec. That's because they're too busy trying to catch those bee thieves. That's what's going on. Jill says, I call it my birthday. Yes, it is Jill's birthday tomorrow. That's why we don't have a video on Tuesday, because we're taking the day. We're going to go see Deadpool and Wolverine and have a bite to eat, all of that fun stuff. So yeah, Jill's birthday tomorrow. So feel free to hit the comments with some happy birthdays, because that would be kind of cool. Jay says, MPI Day in Winnipeg, car wrecks after holiday. Uh-oh. BC Day. There we go. That's a nice simple way. Yeah, we'll just call it BC Day. Every day is a holiday for me because I am an unemployed bum. Uh-oh. That'll do it. That will do it. Let's see. If you are not worried about a bubble breaking, that admittedly we are in a bubble hubba bubba. Good old hubba bubba. I don't think they make that anymore, do they? Follow the owl. Colonel by Day in Ontario. Let's see. Elisa says, civic holiday, not statutory. I have to work tomorrow. Oh, boy. Oh, that sucks. That sucks. So does that mean that you're not getting like time and a half at least? I hope you are, but sometimes. Burger says, speaking of Apple, did you see the Berkshire report? Buffett sold half of his Apple stock, now holds $277 billion in cash. Yes. So that was one of the other things that some people have brought up, saying, okay, the Psalm rule has triggered, and Warren Buffett's going crazy selling half out of his Apple. I mean, here's the thing. I would be worried if Warren Buffett started selling right across the board out of his stuff. But at the same time, I mean, it's always hard. But if he were selling right across the board, that would be more alarming to me. If he's changing up on one position with Apple, it's not like he sold all of it. He sold half, and Apple has been doing well. And I don't know if it outgrew where his positioning on it. Don't know. I don't know that piece of data. Like, I don't know why he did it. I can only surmise why he did it, but I do know that it wasn't a panic move or anything like that. So I think we're still safe. And I'm still bullish on Apple, by the way. Just putting that out there. A straight pay for civic holiday. Oh, that kind of sucks. Well, all right. Well, I can't fix that, but I can drop another membership. So somebody can win. I know you're already a member, so you can't win, but this one is courtesy of Lisa, folks. This one is, we're going to let her have the claim on this one. So don't thank me for this one, whoever wins. Just thank Lisa. All right. Bang, Boom, here it comes. Who wins? Who wins? I wish it would show me here. I have to always look over to the other computer. Carl M. Congratulations, Carl. Carl has won. All right, Al says, I've been watching Apple. It hasn't dropped much in the last month. The other Magnificent Six have plummeted more. I am sure that's why he sold his Apple. It could be. I mean, you know, it could be. It could even be a situation where he's sort of making a play. Maybe he's thinking, okay, well, you know, I'm thinking everybody's going to go down a little bit. So maybe he sold and plans to buy back later. Honestly, I don't know. Like I said, everything is pretty much pure speculation. But you know, when he does those, every so often he does his little address. You know, he'll talk about it in there, and we'll know at that point exactly what he's done. All right, Burger says, I think Apple's going to get India since they hate China. Huawei. Yeah, and I know, and that's kind of the interesting thing. I know when Apple started, you know, opening more things in India, they've also been really, I think they've been careful not to overtly annoy China. So they're sort of trying to you know, play both ends of the game. But it might make sense. It might make sense, and especially if China just gets, you know, well. Also, I mean, the other thing too is I'm just thinking about some of these restrictions too that have been coming down. So it might make more sense to be more invested in China. And then the beautiful thing is, if that's the case, you can then blame the U.S. government and say, they're not giving me a choice, China. We love you, but they're not giving us a choice. So that's, you know, that's not a bad play. David says, what do you think of AGF Management Limited? I don't know. I don't know what I think of them. Let's find out what I think about them, though. All right. Boop-a-doop-boo. All right, where we are looking for... Oh, actually, I need to be in here. Let's get into the work area. All right, so let's take a look here. AGF. AGF Management. Here we go. Let's take a look here. I always like to start with a 3-year. 3-year gives me a good, just an overview of what it's been doing, and I can kind of look and see how they have been. Oh, that's a nice peak. So, I mean, overall, it's a little bit of it's a slight rise. Now, they're not worth that much. 792. I'm not expecting much. Actually, that's bigger dividends than I was actually thinking they'd have. 5.808 quarterly dividend. The earnings per share is in the positive. So I'm liking a few things right there. Let's pull up that key data. Take a look at a couple things here. Let's see, return on equity, 8.21%, 6.02%. Okay, that's not too shabby. All right, there's what I need to do next with these guys, is I actually want to look a longer time frame. Let's go to the 10-year. All right. All right, see, and here's the pandemic drop. You guys can see it. They actually recovered well in that. So this in here was this was a bull market. This here was a bear market right in here. And then this is kind of like the rate hike area. Now, they did good initially in that rate hike area, but I think it's because they were coming into the bull market. Then we moved into the rate hikes, and now they're starting to move back up. So I like overall what they're moving is now. At one point, they used to be a little bit higher, but, you know, I don't know what caused that, because I would want to look into it a little bit more just to sort of see what do they do here. Let's take a look here. So an asset manager with accounts and investments in Canada, the US and UK, Ireland, and Asia. So let's see, they have 40.3 billion in total assets. That's not too shabby. Yeah, so I'd look into it a bit more. You know, I don't mind the dividend, and it looks to me like they do have that potential to slowly get back up here. I don't know what, like I said, I want to know why they had this really bad run. But keep in mind, and this is kind of one of these things with funds, is that sometimes there's overall fundamental changes in a fund. So if you look, well, I'll give you an example here. Let's look at Canoe. All right, so if we go into Canoe, and then we go, I'm going to go all the way to 20 years here. So back here, Canoe was slightly different. Now and I don't know the exact year, but somewhere around here, I think it was when they actually became more of the canoe that we know. And here's a funny thing. A lot of people are like really, really bullish on canoe, but canoe is an income fund. So you can sort of see that they try to maintain a certain level. Now we have been moving up a bit, but keep in mind too, that for the longest time, we've been a little bit lower than where canoe normally is. But this whole part up in here, that was a completely different scenario for the fund. It was basically a different fund if you think about it that way. So it's kind of that similar thing. So when we start to look at here, oops, we'll come back here and we'll go to that 10-year, 15-year. Let's actually go to 20 years. Why not? So you can see there might have been a change of some sort, or then again, it's hard to say because they just, yeah, that looks like they just started in 2006. So that could have been a initial hype and then an absolute crash. Well, this here is the 2008 crisis. So the housing crisis, and then they recovered and then they sort of found a new low. So they may not have, but yeah, I think it'd be something to watch. You are getting, I think you're going to stay positive. I think you will still get that dividend yield. I think that's going to be fine on here. So it's not too shabby. It's not too shabby. We'll leave it at that. All right. Let's see. Canadian Trader says, I read somewhere that he mentioned in an interview that was his plan to sell Apple at some point for tax purposes. Regardless, I am sure he has a great game plan. Yeah, exactly. And that's what I was thinking. I was thinking that it was a move related to something else. And that would make a lot of sense. I don't think it was, I think the timing just happened to be when other bad stuff was happening. So people try to, they try to create causation links when there's no causation at all. King of Day says, curious to see what will happen to Berkshire after Warren Buffett passes away. Oh, good. That's a good question. Now they have been training. So, both Buffett and Munger have been training their replacements. So technically nothing should happen. So nothing should go wrong. It should still be fine. But yeah, it's going to be very, very interesting to sort of see how that all comes together. All right. Just give me 1 second there. All right, there we go. Let's see. Thanks for the membership, by the way. Yeah, absolutely. I still have 4 more to give away, by the way. I have 4 more. Al says, let's see, June 17th, Apple was at $216.67. Today, Apple is at $219.86 compared to Amazon, $184.06 and $167.90. Compared to Meta, $506.63, $488, $188. So yeah, absolutely. Absolutely. Apple's been doing some pretty good. All right. All right. So appreciate your review with H. Here we go. Thank you for remembering. Give me a second. Whoops. I should. Oh, before we get into Amvas's company. So on my open, by the way, once again, I had to, it was taken down temporarily because the Paris Grand Slam claimed that video too. I was like, what? Seriously? So I don't know what it is, but apparently something in my opening. So I don't know if it was the countdown clock. So I changed the countdown clock. So if you guys noticed when you were coming into the stream today, the clock was a little different. So I've changed it. So I'm like, okay, let's change the countdown clock. Because between the 2 videos that they claimed, that was the only constant, was that clock. So the countdown clock changed because of the Paris Grand Slam. Boy, it just annoys me. But I did, I was able to get it fixed pretty quickly, and it's back up again. So, but still, I was like, oh. All right, HBIG. Here we go. So here is our Harvest Balanced Income and Growth ETF. Let's take a look at its performance initially. All right, so it is, let me pull it back here to, we'll actually go to 6 months. So it's brand new. It started, so that basically the first day of trading was 4/15/2024. So yeah, not too bad. So April. And they've done well. They have done well. That's not a bad return out of the gate. So I am liking that. It does have a half decent yield, so 7.875%. So that's not too shabby. So 16 cents per share, and that's a monthly. All right, let's see here. It has nothing about what's going on inside. So what I'm gonna do here is yeah, that's Hamilton. I need Horizon. Let's get. All right, so we're gonna put it in HBIG and then ETF. All right, and here we go. So harvest. Let's come right down here. HBIG. So I always say, if you're holding something, bookmark these pages because this here will bring you in everything, and it's going to have everything. So this gives you everything from its NAV, so 24.44. So right now it's trading just beneath. It's trading just beneath the NAV. So they hold 13. So they're holding ETFs. Okay, very interesting. All right, so let's take a look here at a few other things here. 13. So let's see, zero management fee. But as you can see, always read the fine print. ETF subject to fees of the underlying ETFs in the portfolio. So you're still paying a fee. In here somewheres, we're going to have our, well, for now, let's just go to products. I'm not going to dig around and try to find the MER on this, but you are paying, you're paying a fee for sure. Okay. Now let's go to the portfolio. So here's what it is holding. So you're getting a whole bunch of good stuff in here. And you can say this is a way to sort of really get a lot of stuff. So you've got HTA, HHL, HUTL, HGR, HLIF, HIND, HUBL, HPF. So those are your equity. And then of course, your fixed income, you're pulling up these ones as well. So HPYM, so there's a lot of harvest. So you got a little bit of treasury in here, 10-year treasury, T-bill, short-term bond index, cash and other assets and liabilities. Well, so these are technically not shares. So these are just what they're holding. But that's, there's nothing wrong with that. And you can see you've got a good diversification here. So I think this is a good ETF. So is it good? Yeah, it's a good ETF. And you also have a leverage version. Well, if it's good and you're okay with the leverage, then sure, why not? So, there's not going to be a lot of difference between them other than that leverage just going to use a little bit of extra. So HBIE would be enhanced. So just something to say. All right. Al says NVIDIA June 18th, 135.58, and today 107.27. Apple hasn't really been hit with this current downward tech trend. No, Apple has done fine. Apple has done absolutely fine. JJ says, I'm currently working at a client's place building some furniture. Scared about the maybe bad mic quality from my phone if I join the stream now. No worries. Like I said, I'm just going to drop that. And if somebody wants to jump on, they can. If they don't have to. As you guys know, I can talk all on my own for a long time if I need to. Yeah, it's just one of those options that I'm putting there for you guys. So, yeah, it's kind of cool. Let's see. What do you think about YMAX ETF? All right. So good old YMAX. Let's first of all pull it up here. Oh, that's our Discord, by the way. Great place. Great server. YMAX. All right. So this is your YieldMax Universe Fund of Option Income ETFs. So I have not looked at this one in particular, but I've looked at a lot of the YieldMax. A lot of their different ETFs. So this one's not going to be around for very long. So yeah, it hasn't been moving in the right direction. That's for sure. We've had some movement down. Let's see here, 65.2. So you're looking at a really huge yield. So 43.346%. And that's kind of with the general gist of these. Now, this one here, we're going to need to go to YieldMax because I don't know. Like I know a lot of the YieldMax are using synthetic covered calls. I don't know if this one does or not. I'm going to assume it does, but I hate to assume something. All right. WiMax ETF. Let's go here. All right. Here we go. Let's take a look here. Come on. It's taking its good old time loading. All right. So let's take a look here and see. First of all, let's take a look here. The fund is a fund of funds. Ooh, there we go. So it's primary investment assets and certain yield. Okay, so it's holding other yield max ETFs. So it technically wouldn't be a synthetic covered call, but it's holding synthetic covered calls. So it's kind of like splitting hairs. Let's see, a monthly basis. Yeah. So, I mean, right now, these guys have been doing, like, most of these they've been providing a lot of dividends. But here's that thing. It's one of the situations where their price. So when you're not actually holding underlying stock. So in the case of a synthetic covered call, you don't actually hold the stock. So your price, the price of your stock is more dependent, not on the price of the asset that you may be writing options on, but it's more dependent on the actual amount of people interested in buying that ETF. So while there's a lot of interest in these yield max stocks, that's what's going to keep their prices from falling fast. Not to say they won't fall, but that will be what sort of holds people in place. And what you're going to have to do in a situation with something like this is you have to really weigh things in. So with this one in particular, as we were looking here, oops, right here, boop, nope. There we go, this one here. I got way too many windows open, way too many. So depending on where you bought in, you want to sort of look and say, okay, well, you know, they have been paying 65.2 USD per month. Well, that's what they said there, but have they? First of all, let's take a look. So no, it's been all over the place, and that depends on what the fund is making. So, you know, they started out at 53 cents. They made it up, like they kept going up to 73.2. That's been their best. And then they're down to 65. So that's fine. You're certainly getting some money. So when you're taking it into consideration, you're going to look at this from that lens of a total return stock. You have to look at it that way. So you're going to take what you're getting here, and, you know, right now it's claiming, you know, and this is a number that will change from month to month. We've seen that from the numbers, but you're looking at a 43%. So 43% is cool. However, give me a second here. Let's just going to pull something up here. All right. We're gonna use my friend here. So 17. So this here is what? WiMax. We'll put in WiMax. All right. So we're just gonna look at the last. Now we'll just look at the month. We'll look at we'll go with more than the month. Let's see, how long has it been in operation for? Oh, look at that. Oh, really? It's been around that long? Okay. We'll do the year to date on it. So, I got to go full 1 year. All right. So let's see here. January. All right. We almost got enough, but January 17th. So let's say you bought it on day one at, let's see here, opened at right here, 1980. We'll put that in here. I'll use the 3-year column, guys, but we're only looking at year to date just because it's closer. And so okay, we got 1980. Their current price is 17.75. All right, so we do have to look at, you know, the fact that we are losing 10.35% in value. So that's funny. We're going to add up the dividends here, and we'll take a look and see how many dividends we got during that time frame. All right, so 0.652, 0.73, 732, 0.632. We're almost finished. 0.568 and 0.534. So there we go. So these are, so we received $3.48. So I'll put this in here. Oh, sorry, 384.8. That's what we received in dividends. So right now we had negative 10. So that actually takes us to 9.08%. So there we go. Whoops. I forgot this wasn't even on the right screen, but yeah, so we were looking at, so their price was 1980. It went down to 1775. That's a negative 10.35%. When you factor in all of their dividends right here, so $3.84, well, 84.8. You put that in, that gives us a total return of 9.08%. So when you're looking at, and I'm going to pull this away for a second. So when you're looking at this and you're thinking to yourself, you know, oh boy, 43%, I'm on board. I'm on board. Well, you know, you didn't get that. You got 9.08%. That's your total return. Now, mind you, it, you know, I'm just going to do that 1 year. It just started here. So even though it started on the 17th, when we look at their dividend data, so that first dividend was almost basically the end of February. So you kind of lost 1 month of dividends there. So that would knock that number up a little bit higher, just in all fairness. And also, I mean, if the price turns around and these dividends start doing better in the bull market, that's going to change the game as well. But I usually will evaluate, and right now it's a 9.08% for me for the year. Mind you, there's a lot of stocks that are doing much worse. So it's just something to keep in mind. And now, of course, on the Canadian side, you also have to realize where most of that total return is coming in the form of a dividend. You have to be careful where you hold it. So, for example, if you hold it in your TFSA, you're going to lose 15% of that. And there's nothing you can do. If you hold it in your RRSP, you will get that whole dividend, no problem. But you're going to pay tax on the entire thing eventually when you pull it out of your RRSP. You know, you basically, that's the thing about the RRSP, right? Everything becomes 100% taxable when you pull it out. So, you know, that's kind of fun. And if you do it in a non-registered account, well, you are going to pay that 15%, but you can claim it back. But in a sense, when you're claiming it back, you're just creating a tax credit so that you're not paying that tax on that dividend twice. So basically, it negates the tax that you would have to pay to the Canadian government. So it kind of works out that you're getting taxed on it no matter which account you put it in, one way or another. You are paying taxes. You know, you just have to sort of decide how you want to do it. It's just something to keep in mind. All right. Whew. All right. Terry says, perhaps useful info. Simply Bank offers 5.75% U.S. savings account until November. Oh, that's not too shabby. That's not too shabby at all. The big thing, though, is whether or not you can use that. It would be great if you could use that U.S. savings and transfer that into your U.S. brokerage. That would be very, very cool. And Mary is throwing a happy birthday to Jill out there. There we go. There we go. Well, at least one person said hi, just said happy birthday to Jill. Come on, folks. You know, and you know what? It's her birthday, but I will throw a gift to the crowd here. Just give me a second. I'm gonna remove that because I have to pull up the other screen, and I don't want to give you an infinite me thing. Okay, here we go. Here we go. Bang, boom. It's coming. All right, we'll see who won this gift. It is Andy Papa. Congratulations, Andy Papa. You've won a membership. All right. To find if a stock is undervalued, check the gram number. Just a rough estimate, though. Okay. Yeah, I mean, there's a lot of ways that you can sort of look at that. The gram number definitely being one for sure. Let's see, Enid, what a reasoning from YouTube. Terrible. I know. Well, here's the thing. like, honestly, because they're time sensitive, when YouTube goes and listens to the Paris Grand Slam and pulls my video, I have because nobody's gonna watch. Nobody is gonna watch a live stream on a market close or an open, 5 months from now, because why would you? You got new ones to watch. So being time sensitive, I can't even appeal it. I just have to say, okay, delete the little part that's offending the Paris Grand Slam, and let's get this back in circulation because it's time sensitive. So, I do that. Now, what that does mean though is that so for the moment, for the beginning of the stream, so you take that open. So all of the AdSense that would have came to me in the open, it all goes to the Paris Grand Slam. It's not like it's a lot; it's a couple bucks, but the Paris Grand Slam has probably stolen about $5 in total from me, and I'm annoyed. I'm annoyed at the Paris Grand Slam. It's like if I'm ever in Paris and there's a Grand Slam, I'm not going to it. I will not go to it just on principle alone. Let's see. Michael says this trades in Canada only. Which one? Are we talking? No, the if we're talking about the max, the yield max ones, those are U.S. stocks. Those are U.S. ETFs. JJ says, Michael, yeah, HBIG are on the TSX only. Oh, okay, that one there. Okay, fair enough. I'm going to join for a bit just to say hi. Let me know if the mic quality is bad. Okay. Oh, I should probably look down below and see if you're there. Oh, I see you. All right. I will, let's bring in JJ. He can say hello. Hi, JJ. Are you able to say hello?
Yeah, I can. How's the mic quality though?
I have to turn up my sound so I can actually hear him. There we go. Yeah, it's not that bad. It's not.
Can you hear me now?
I can hear you. I can hear you. Yes. Let's see. I can hear you.
There's this weird feedback.
I hear the feedback. So it might be with the setup that you have. I think it's feeding it back into the mic.
Oh boy. Like, do you hear this echo? Like, I feel like I can hear it.
No, I can definitely hear it. Boy. All right. Yeah, it's do you have it playing on your computer at the same time?
No. I'm using my phone. I only have the live stream playing on the StreamYard right now because I have YouTube paused.
Oh wow. Yeah, it's you're unlistenable to at the moment. So maybe
Hold up.
maybe what we'll do.
Let me try something else.
Okay. If you could just mute yourself while you try something else. All right. It's like it keeps going round and round and round.
Are you sure Candace is not on your side? Can you hear me now?
I can hear you, yes.
Are you sure it's not on your side though? Because I only have StreamYard playing on my end. I can hear the feedback on your end, like it's looping back for some reason.
Oh, you know what? You might be right. You might be right. No, it was me. Holy banana bread. Yes, you see, normally I always have my computer on mute, and then I'm using headphones when I want to listen to it.
Mm-hmm.
So when I want to hear you, I have to turn it up, and I forgot to turn off my other thing. Okay, I had to mute the tab
Yeah, that makes
I'm using
sense.
to drop memberships. I should drop one right now to thank everybody for sticking through that snafu. Holy banana bread. All right, let's go. Bang. We'll see who wins. All right, here we go. We got another one coming. All right, while we wait for that, actually, here it comes. It is Living on Cash. Congratulations, Living on Cash. I don't think I've seen Living on Cash before. So congratulations. Congratulations for sure. All right, let's see here. So, okay, in New Brunswick, it's called Give Up Resistance is Futile. Fun, fun, fun. All right, let's see here. Is anyone biting? Whoops. On the crypto crash? Yeah, I mean, that's a funny thing. I found that everything. Oh, let me take a look here. All right. I found that everybody panicked. Like even crypto, I know that Bitcoin dropped a little bit. I think right now it's sitting at 58,722. So, yeah, it could be a good entry point. It could definitely be a good entry point. I'm looking to see. I'm looking to see it improve, but yeah, what can I say? It should be. The funny thing is I think we'll get most of the red out of our system on Monday when we're closed. So that's going to be good for the overall market. And I think Bitcoin will bounce back as well. Let's see. This is cool. Yeah, absolutely. I still can't believe it was me creating all that extra noise, but that's fine. It happens. Let's see. Planetaire earnings is Monday. Waiting for Planetaire. Hope it goes down to 22. That'll be interesting. That'll be interesting. Let's see here. Amogen Caterpillar, Suncor is Tuesday. Yeah, we got a lot of. And Caterpillar is one of them companies. Like I've always liked them, and I don't. It might be because it's got the word cat in it. I don't know. Let's see here. Novo Nordisk, Disney, Shopify earnings on Wednesday. Manulife, yeah, absolutely. Oh, and here's a happy birthday, Jill from AmVas. Thank you. Let's see. Eli Lilly, Brookfield earnings Thursday, AQN Friday. I love the handle name Living on Cash. Yeah, exactly. It's actually funny. When I first saw it, the thing that popped into my head first was John Bon Jovi. Because I was thinking of, living on a prayer. I was like, living on cash. So I'd rather live on cash than a prayer. Personally, I can buy something with cash. With a prayer, I can only hope for something. So just a thought. Abalash says, hi, Candace. I invested heavily in Air Canada. Do you think I should sell or keep it? Bought at $16. All right, let's look at Air Canada once again. I never get tired of doing the Air Canada one. Let's bring this all up. Whoops, I didn't want you guys to see the infinite loop,
We
but
had
you
this
did now.
exact discussion on Wednesday, Candace, if you remember.
All right, Air Canada. We'll bring up the 5-year on Air Canada. So you can sort of see before the pandemic, Air Canada, of course, had its big crash. And that's fine. Now, with this crash and with all of the issues in the pandemic, one of the things Air Canada did is they diluted quite a bit. So when that happens, your chances of getting back to this market cap, pretty slim. So we're not going to get back up here. We're just not anytime soon. So when we look down here, you can sort of see that, they did bounce back and they got back to around $25 to $26. So that's a good realm. And I think that's a good goal for Air Canada. So right now we're sitting at $14.90. That to me, and I'm going to go to a smaller time frame so we can see it a little bit better. That to me is fantastic. So this is kind of like that, all of that red sell-off that we had the Thursday and Friday brought Canada down to a very ideal, like they've not been this low. Well, I think they might have they touched it on the pandemic. So at that pandemic dip went down that low, but that's a fantastic spot. I do believe that getting back to $20 about here is certainly doable. And I've always sort of maintained that when they're under $20, they are a good buy. So right now, they're really a good buy at this point because they will bounce back. They will get back up. I would say here, like, even though I said under 20 is a good buy, let's modify it. I would say under 19 is a place to sort of buy and hold. Then maybe sell it at, you could sell it at 19, but I would sell it at, for me, $20 is where I would sell it. And I have made some swings like that with Air Canada. I don't currently hold any, but I'm looking at that 14.90 and I'm thinking Tuesday morning, I might add some to the challenge considering that price. Oh boy, that's not a bad spot. So your question, should you sell or keep it? Obviously you need to do your own due diligence, but I would not realize a loss like that. Not when there's that potential to get back up to 20. Especially once we finally get a few more rate cuts under our belts, the market starts getting a little bit of confidence. Right now, the market has no confidence at all. You can say, as any little thing will make us fall. Once we get all of that, then you're going to see Air Canada start to improve. And I still think, and it's up to you. I mean, if you get nervous, I would at least wait till you got back into the green. 16 should be very, very easy to do. And if I remember on Wednesday, we did take a look at some of the projections for Air Canada a year out, and they were definitely over $20. So, and we can do that again. Let's see here. Let's go to Simply. Air Canada, not Aurora Cannabis. Air Canada, this is the one we're looking for. All right. Let's see if I can. So I've already paid for Air Canada. So, all right, where is my, whoops, it's up higher. All right. I think it hadn't loaded yet the first time I went through. The one I'm looking for, it should be just a little bit down here. Here we are. This is what I'm looking for. So these are the analyst price targets. So right now for Air Canada, they're estimating the 1-year price to be around $23.29. So that's absolutely fantastic. So that's a 56.3% rise. So I think, and I kind of agree with them, I think that's a safe, healthy range for Air Canada to be in. So I do think that will, I definitely wouldn't sell personally for sure. Carl M says, happy birthday, Jill. Also, thanks for the gift. Oh, yes, that's right. That's right. The membership. It was Carl who won that. Nice. We still have 2 more to give away, by the way, guys. Abalash says, I see Yahoo Finance mention strong buy, but a lot of commenters mention that there are a lot of headwinds, such as a pilot strike, increase in salaries. Any chance of them going bankrupt? No, I don't think there's any chance of them going bankrupt at all. There's going to be bumps. There's always bumps along the way. Like, if you have a pilot strike, they don't last that long. Also, you got to keep in mind too, Air Canada is like, the government can't really afford to have Air Canada ever go under. And that's one of the things, when you don't have a lot of airlines like Canada, you're not going to let your big one go under. It's absolutely, to me, going bankrupt, I can't see it happening. I can't even think of a scenario where that would happen. So I think you're safe on that front. Michael says, I sold GTN, which has a dividend of 8 cents, which sold at $6.14 to break even, but sold 50 shares at $6.50. Then the other $19.50 to break even. This market scares me. Yeah, I mean, a lot of people are very scared of this market. So, it's not just you. That's just something to put out there. A lot of people are afraid, and you have to sort of look. And I always look at it this way. Some people if you're bullish, so let's say you're bullish. Some people who are bullish will look at somebody saying, oh my God, I'm going to move everything into cash. I'm so afraid. you might look at them and say, oh my God, I can't believe that. How can they feel that way? But, the thing is that they do feel that way. So, to me, you can never take too much, because it's your money. You worked hard for it, right? So you can never take too many precautions. If the market is absolutely scaring you and you want to move to more of a cash position, I support you 100%. I support you 100%. Or you have somebody like 9. 9 is like, yeah, this is a good chance to buy. And it is. So you have to look at, one of the things I will always point out, though, is that let's say we do get a recession. Well, what is that going to mean? Well, it's going to mean that a lot of your, a lot of the stocks that we love, that we talk about, and ETFs, they're going to be on sale. They're going to be at a reduced price. So if you have that ability, and this is what some people have been doing. So I'm not saying Warren Buffett, for example, but some people who are thinking, okay, well, maybe we're going to head into a recession. I think we are. They might be saying to themselves, and if they do, they might then be thinking, okay, well, I've got these stocks right now in profit. Let's cut down my share on here so I've got some money put aside for some of the sales that are coming up. Because if you have cash, so if you do have cash in the middle of a recession, when the bottom is pretty much in, that's not a bad thing. That's not a bad thing. The big thing is, though, is knowing that the bottom is in, because you can't really know until after it's no longer till after the bottom has passed. So that's one of the things, like I always say, let's say if you're in a recession, don't try to time the bottom, just DCA. So let's say, if things are down considerably, start DCAing. Maybe some of your shares will hit the exact bottom, but when you get out of that recession, and keep in mind, a bull market does tend to happen in the middle of a recession, because that's part of the carrying out of that recession. So it's not like you have to wait for the recession to end and then the bear market ends. No, you go into a bull market in the middle of that recession. That tends to pull, that momentum helps overall, will start help the economy, and it will help pull the recession out. It's just, it's kind of the way that it works. So you don't have to worry. I always say don't worry so much about it. Now, where recessions crush and wreck people are the people who panic. So, for example, if your stock is down 20% and you're like, I can't lose all that money, I got to sell. You bite the bullet, you lose that 20%. Well, you realize that loss. And maybe the bottom's at 25%. And it goes down to there. And when it's at 25%, you're thinking, oh, I'm so glad I got out. So glad I got out. Well, then it passes the bottom and it climbs back up. And next thing you know, it's like maybe 10% down. And you're looking at it and going, oh, crap. I should have waited. And then next thing you know, it's back in the green again. And you're like, oh, man. And at that point, you're thinking, it's going up. It's going up. I better just buy, get back in. And you've cemented quite a loss at that point. And that does happen to people. So you kind of don't want that to be your story. So it's one of those situations. Sometimes you have no choice, right? If you're in a situation where all of your assets are tied up in stocks, you've lost your job, you got to feed your family, pay your rent. Sometimes you have no choice. You may have to liquidate stuff. There's nothing, especially if you don't have that emergency fund that I always mention is very important, or maybe you did have the emergency fund, but you've burned through it and you just can't find a job and nothing seems to be working out for you. Sometimes you have no choice, but even then you can still be strategic, right? So if you're looking at, let's say you have a lot of blue chip stocks and you do have to liquidate, well, you're going to you're not going to liquidate the ones that are doing the worst, that are going to create the biggest losses. You may actually end up liquidating one that's not doing so bad. Maybe you're a recession buster. Maybe it's your CNR stock, or something like that. Or maybe one of the bank stocks. It just depends on where they are in that group. Because if you have something that doesn't have a lot of recovery to do, it makes more sense to liquidate that to get yourself through if you have to. Michael says, I think tech will keep selling off, but the problem is when will AMD safe to buy, which just report earnings and raise outlook to go to 152 to drop below share price below earnings to hit 130. Yeah, it's going to be one of these interesting things. I think it's kind of interesting. I think tech may, not all of tech, because I mean, obviously Apple's still doing fine, but I think there'll be overall a lot of fear in tech probably until the NVIDIA earnings report. And then that is either going to send some of that fear over the edge, or, or is NVIDIA going to throw another Hail Mary? That's the question, right? That is the question. Speaking of Mary, don't forget to hit that like button, folks. I'm going to have a sip of coffee while you guys do that. Al says, I wish I had a job. I would be buying right now. Well, there we go. Hopefully you can find a job, Al. Hopefully. I know right now is probably not the best time to be hunting, but, or see if you can at least find a side hustle to make a little bit of money on the side of some sort. 9 says, fractional share DCA for me. And that says, appreciate your Friday full market day show and all who participated like JJ. Yeah, absolutely. That was a fun show. That was it was a long one for sure. But yeah,
I'm still here. Can you hear me?
You're there. Say hi.
I did. Well, I did earlier, but then you kept talking. So I was like, oh, I thought my mic wasn't working again. Sad face.
Oh, I just talked. See, I'm so used to being by myself. You just gotta be aggressive and break into my conversation. Stop me. Just stop me, because I'll keep going.
I did that once, but then I didn't like how it felt like interrupting. And then I actually asked Vineet on how it did, and he gave me a full-blown lesson. So I got a little bit butthurt.
Yeah. No, with these type of things, honestly, and this is one of the things when I first got into group chat. So back during the Danter Banter, some people will just talk if you let them, and they won't stop. So when you got a point to make, I learned you just gotta you gotta push your way in and start talking, and then they'll hopefully shut up and let you go. Let's see here.
I feel like our community is pretty nice. So yeah. Not too much of that.
Amphass says, would you do another live market show anytime soon again? Well, I don't know about a full day, but I do market closes every Wednesday. I usually give you guys an opportunity to earn an extra one if you want. And I did the market open on Friday. That was fun. I actually enjoyed that quite a bit. It was kind of nice to be able to go in. And then the fact that the market absolutely exploded to the red made it so much fun, to believe it or not. All right. Abalash says, do you see telecom will fail during recession, or have BCE and TELUS priced too low that they will only go up during a potential recession? I think right now, even if a recession starts to look even more likely, you'll see the rate cuts pick up faster. And that's actually going to help the telecom companies because they do have a lot of debt. So I don't see them falling much further at all. And it's kind of interesting. They actually did okay on Friday. So that was kind of cool, other than Rogers, but they did okay. Al says NVIDIA report is just going to be green for NVIDIA for the day, just like AMD, Meta, Apple. The U.S. market will continue to be rough until the presidential election. It's hard to say, though, because normally when NVIDIA has some of their really good days, a lot of times that does filter to some of the other stocks. And it may not stick with them long. It might just be a temporary pump for some of them. But I do think that NVIDIA has that ability to change the overall feel, even if it's just temporary. Amvas says, if Canada is not allowed to sell base materials to China, how would this impact base ETF or CAD miners? Thanks. That's a good question. We'll have to sort of see how it goes. Like right now, if we're not allowed to sell base materials to China, and this is a thing, I think this is going to be, it's going to be one of these situations where I would kind of wait to see if it even passes, first of all, because, I know that we don't want to give them some of the critical minerals, but China has a lot of their own. So more than anything, it's not even, I don't even think it's a situation of selling. I think the bigger concern is buying some of these materials from China. So I wouldn't be too, right now, I don't really have an opinion, to be honest. I don't have an opinion on it. I need to look into it a little bit more. I wasn't even aware that we were looking at blocking sales to China. So I'd have to look more into that to sort of get before I can give you a definitive answer on it. I don't want to pull something out of my butt. That's for sure. Al says, yeah, I like the full market show. It was a good stream. No, it was. Now, man, here's the thing. Next time I do a market open, you guys have the power to push that longer, right? As long as you're there and you're you're asking lots of questions and keeping the chat pumping, the show goes a bit longer. The show goes a little bit longer, sort of like this week, when we got a hot crowd and you guys are just slamming, it makes the show go a bit longer. So nothing wrong with that. All right, let's see here. Telecoms are the only things that keep me in the green. While markets were red, I was green the whole week. Yeah, the telecoms did fantastic for sure. Wolves, it kicked me off by accident. Oh boy. I'll stay backstage for now. I need to get a portable mic. Yeah, just something that you can carry with you. And, in case you're not home and you want to join in, that makes sense. That makes sense for sure. All right. You know what? I think it's time. Just give me a second here. Make you guys not look at the ultimate loop here, but it's not what I wanted to do. Here we go. It is time for another membership. Here we go. Bang, boom, and done. So let's take a look. Any suggestions? I think Rode makes good mics. They have, they definitely have some good ones. I would suggest looking into Rode, see what they have. Abalash has won the membership. There we go. There's only one left. All right. Let's see. And NVIDIA has gone up too much and could drop to $80, which is the 200-day, and has gone up too much. And the president and CEO selling almost every day makes you wonder. Bear, but lower outlook is big risk. That would be... I mean, there's part of me that says, heck, if they went to $80, I would be buying in big time. But yeah, it's one of these things. I don't know about it going that far down. Like the thing you have to remember with NVIDIA is right now they really don't have that competition. The software that they're using with their chips, if you believe a lot of the technology experts, they're saying that most companies are about 10 years behind them on those chips. So, unless once a company finally catches up and is able to replicate what NVIDIA is doing, then the rules change. But until then, and as long as the desire. Now, if, we know investors have been upset about AI and the returns. If it got to a point that AI just sort of got shelved like the metaverse, well, that would be a different story. But I honestly don't think that'll happen. I mean, just the adoption of ChatGPT or Claude, everybody's using it. I can't see it going back. It just really, I don't think it can. All right. Al says, my membership expires on Monday at 2 p.m. Not sure why it is such a different time. That's weird. I must have done it on, I don't know if I did it on a Monday. It's hard to say. I don't know. Abalash says, thanks for the membership, Candace. You're welcome. The video won't drop to 80. There we go. Al's on my side for this one. All right, we got one left. Let's drop it. Let's drop it. We'll get it. We'll get it done. We'll get it over with. All right, here we go. Who is going to win our last one? I don't know. I don't know. Let me take a look. The only unmembered name I can see looking at my screen right now is Michael. So, all right, I'm gonna guess Michael. I'll guess Michael. Why not? All right, let's find out. It could be anybody, but my guess is Michael. Michael Anthony, are you gonna win? For a second, I was about to say it was Al, but no, it was Al just putting a comment under. Bismarcky. Congratulations, Bismarcky. It was Bismarcky. All right, it's not Michael, but I tried. I tried to help the algorithm, Michael. I tried. All right. Whoops. Let's get down to, there we go. The CEO of NVIDIA sold off 169 million, which represents 0.169% of his shares. Not even 1%. Not sure why people keep bringing this up. Yeah, I mean, you have to sort of look at, like in some cases, there's tax reasons you might be doing it. There's lots of reasons that I have a feeling like I can't see him not having faith in his own company for sure. So I'm fully on board with NVIDIA. Enid says if NVIDIA drops to 80, I'll buy worth 5,000. Yeah, absolutely. Absolutely. A lot of people will buy. If NVIDIA somehow dropped to 80, you would see a giant spike after that. There'd be so much buying pressure. Wow, long stream. I know. We are coming up to the end, though. We're getting there. If you guys got some last-minute questions, burning questions, drop them in the chat. 9 says, I'll buy VFV and VOO if NVIDIA drops to 80. They both hold NVIDIA, by the way. So, yeah, it's one of those situations like pretty much any ETF that's holding any kind of tech, or if they're holding S&P, you're probably going to have a strong amount of NVIDIA in it. So, that's going to be fantastic. That's going to be fantastic as well. Let's see, NVIDIA won't die anytime soon. No, exactly. So one thing I do want you guys to all leave with here today is that lack of fear of that Psalm, of that, of the Psalm thing, of the Psalm report. It's just not, we're not running it. We're not going into a recession. It's as simple as that. As much fear that is out there, you don't have to worry about it. We're safe. We are safe for now. There's a lot wrong with the economy. But that Psalm check, no, you don't need to worry about that at all. And even, like I said, at the beginning, for those of you who weren't here at the beginning, Claudia Psalm, the one who came up with that check, she even came out and said, don't worry. It's if it's triggered, it's wrong because of the fact that 1 year ago, nobody was laying off people. They were holding them because of the labor shortage. So we do have, we do have an out on it this time. But if we had not had the situation we had last year, then yeah, it would be a bigger concern, as a lot of YouTubers have been sort of making it out to be. Don't worry about it. As you're browsing YouTube and you run into some of those folks who are going on, oh my God, the end is nigh. The Psalm is triggered. Then don't worry about it. Do not worry about it. Just remember, Candace said no. That's all you have to do. That's all you have to do. 9 says, yeah, I feel like I'm buying NVIDIA when I go with VFV. Michael says, CEO of NVIDIA sold all last week and even Friday, 105, which is selling at any price. You got to realize, though, I mean, this guy probably bought it at a lot lower than this, so he's probably still well on the green. So, I take it with a grain of salt. King of Day says overreaction in the market. Yes, I like I said, right now investors are like people who are creeping along on eggshells, trying not to make noise. It doesn't take much to spook it. Once, and this is the thing, I think we will be in a spooky market situation all the way up until probably the U.S. election. I'm not saying that we're going to have a bad market up till the U.S. election. I know some people have been saying that, but I think we're just going to be on edge. Once the U.S. election is behind us, then I think things can start to get back to normal. It doesn't even matter who wins. I think there will be a new normal for both candidates. Yeah, people are just panicking. Be smart and buy the dip. Exactly. That's the thing. If people are selling things because they're panicking, be the person buying those things. Absolutely. All right. It means I agree. Awesome. All right, everybody. I think we're at the end. It's been another great show. I have had fun. Congratulations to all who won memberships today. You guys won't see me again till Wednesday, as like I said, we're off for the Jill birthday thing tomorrow. It feels weird to not have that one video, to have one video less this week. It's been a long time, but we will be back. There is, by the way, a vote currently going on for the deep dive. I think Scotiabank is winning it by a little bit. So if you want to have your say in what I do next on that deep dive, be sure to go to the community tab and vote before. I'll be scripting it on Tuesday. So as long as you get the vote in before Tuesday, everything will be fine and dandy. Okay, everybody. Until then, have a fantastic long weekend, and we will see you again very soon. Bye.